Hello, hello, hello. Happy non-farm payrolls Friday. How is everyone doing today? Good morning, Sterling. Putting the news in. Thank you for putting the non-farm payrolls info in. Good morning, Patrick. Slowed more than expected. Well, it hasn't been rising more. It's been better. But now the market's celebrating it because, we're going to have to just cut rates. Going to have to cut rates. Oh, the word on the street is if it ticks back up to 4%, Fed's got to cut. Fed's got to cut. We'll see. They start cutting with inflation running hot. It'll get real interesting. So, what else? Apple, people are celebrating their earnings. I think it's more now celebrating that the another massive stock buyback and a bump in dividends because they literally have nothing else to do with their money, and they're not innovating really much anymore unless you call the whatever that virtual reality headset they did innovation. Uh, but it like beat on a really tamped down forecast. So again, we're celebrating mediocrity. We're all standing around a Ford Focus and clapping. I mean, that's how I feel. So sorry, I'm tired. I only got 3 hours of sleep last night, but we can still stand around a Ford Focus and clap. Nothing against Ford Focuses. Nothing. I'm not discriminating against Ford Focuses. It's the achievement award of cars, like the participation award. Uh, oh, how many people have I lost already? All right. Well timed, but we got prior revisions also lower. Apple revenue falls 4% year over year with the fifth negative growth rate the last 6 quarters. But we're still celebrating like, hey, everything's hunky dory. Hey, I haven't seen you in a long time, Options 22. I thought you disappeared. I hope everything is well with you. Good morning, Royal Palms. Good morning, John. Good morning, Eric. Thanks for the fishing list. I want to review a couple things from yesterday because finally got the reversal pattern. Then we got the up move. Charles, hello. Hello, Heinrich. Good morning, Anissa. Well, let's just get to some stuff today. We don't need to go off on anything else. So we had the non-farm payrolls coming in weaker than expected. Unemployment rate ticking up to 3.9 from 3.8. Participation rate holding steady. Roughly average hourly earnings coming in less than expected. So that's also getting celebrated. I mean, look at government payrolls only 8K versus 63K. What does the government just did they stop hiring all of a sudden? How's that going to work going into the election, trying to keep everything afloat? All right. So we have the really pay attention. 9:45, and these are Eastern times. 9:45 minor number with the composite and services, but the ISM. Okay, so services still expected to be in expansion, but really pay attention to the employment numbers and the prices. Really pay attention to this ISM services prices. It's supposed to roughly come in line with prior, but pay attention to that if that jumps more so than because then we get into that's the main driver behind services and employment. We really watch those two things. That's the only thing that could put a damper on the bounce. The Apple buyback bounce, and the unemployment miss, celebrating higher prices and weaker employment. That's not a good combo, but the market will celebrate. By the way, we got Fed speak over the weekend. What else do we have? Good morning, Mark. Hey, good morning, Kalani. What time is it for you right now? What time are you at, Kalani? You see the big celebration. Buy everything. Fed's gonna have to cut, so buy everything. Well, we're still in the channeling bounce. The channeling bounce play. Groups, everything positive for today. Technology and consumer cyclical leading the way. The Fed watch, we're down to the first cut back to September. and a second cut in December now. So we're back to market pricing in 2 cuts. So yesterday it was 1 cut only starting in possibly November. Now it's 2 cuts starting in September because of 1 week or print. This market's fascinating. Fear and greed still in fear mode. I'm going to be watching for this to get back to neutral. So that's where we sit. We already talked about, I know you put in Coinbase too. Not real interested in that. Today there was really nothing besides the poop emoji company. So, not much to talk about there. I didn't even look at Hershey's. All right, that wraps up earnings for this week. So, again, we're in the strong bounce. Still watching 51.95. Nothing's changed on the closing basis, but we're still just channeling up. Wanted to go through something. We had people asking questions yesterday. Let me get down to the shorter term time frame. There's your big bar on the weaker non-farm payrolls. Look at the market's back to celebrating less good news. Less good news. We won't even call it bad news yet, but it's less good news. So, a couple things from yesterday. Just show you. 1 minute. If you're watching the 1 minute, because we had it brought up yesterday. So, nice little. Remember, a lot of bottoming moves, especially in these markets, against the support area you get the initial V-shaped bounce, but this was a inverse little micro head and shoulders. So you see there stalling out, coming up to the first target. That was a flat neckline one. So that was interesting, but what's also fascinating is, all right, what I always find fascinating is I prefer the 5-minute chart. Where's my 5-minute chart? So here. So you got the little, here was the thing that really formed and then you had a slightly bigger head and shoulders. But here was the thing that one of the patterns I love, I've talked about in the past. So you get the strong momentum bounce, and then look where it retraced to, right between the 50 and the 62.5. And you got little bounce buying pressure, and then it was off the race. Then you had a little channeling backfill flag, and then it continued the rally. And if you notice with the tick yesterday, so this is where you get to be patient. You don't try to catch every move. You try to catch the probability move. So people way overtrade from my perspective. Way overtrade. But after, you had the strong opening, then we finally got the pullback, but then it started stair-stepping higher until the end of the day. You see how it's stair-stepping higher in the tick until the very end of the day. So you had a divergence because you started pushing down, and then you started getting buying pressure coming in on the tick, and you got a couple different pattern setups. So a lot of times you'll see you don't have to nail one time frame. It's more important that you learn what time frames you're using, and then you don't want to constantly flip around because there's setups on multiple time frames if you're paying attention. All right. Overall, let me just unclutter this. We're back to that 50% level where we stalled out before. I'm really paying attention to this with the ISM numbers coming out 30 minutes after the cash open. But if we rocket through this 5150 area, really key, there is not much until you get to 5195. There's really not much major resistance. You see here's the prior rollover area. But then and this was the prior support becoming resistance, so I hope everyone can see this. Support, break, resistance, we're back to that very end. That's the 50% harmonic area. Very key level. But then you're into this clear path move, especially in the 4-hour. You can see it here. The next breakdown area, which is fascinating, the single candle breakdown area from this big move is right there. Look where the 62.5 is. 5190, 5195. So that if it continues to recover in this channeling recovery bounce pattern, which is not a strong bottom pattern yet, it has to get above that 51.95 on the closing basis. But that would be my next target if it continues. If it doesn't, if we get the reversal in here, then that's at prior resistance in the 50% retracement. Then the key area I'm watching is really back to about that 5100 to 5105, and then the bottom of the channel. And at this point, what would have to get, now if this makes new highs going to the open, you're going to have to update these levels, but right now it's about 5036. 5036 is the next rollover play. If this keeps running up to the next level, then that level would come up to about 5050. Other than that, I'm still watching with the corrective pattern. So we have the daily cycles clearly turning up in a recovering flag channel pattern. So we have the initial sell-off. Now we're recovering. Well, we still have, we're going to see if weeklies start turning up again or not. Now, if we get that close above that 62.5, especially if we close the day above the 62.5, then I'm going to be watching for that return to the 87.5 to 100, the prior high area, and set up a potential massive double top pattern, which may never trigger because the trend on the weekly is still up. We've had a recovery, but we're still in neutral mode on the daily. It has to close above 51.95. Going to keep talking about that level because that's the key level. Good morning, Richard. That was you. That was you. We got a piece with the macros. 3 a.m. Well, hey. It's 3 a.m. for Kalani. Up even earlier than me. Up even earlier than me. Yeah, another Boeing whistleblower dead. So, hey, Christoph. Oh. So, all right. That's the little overview. You can still look in, you know what, if you want the pullback levels, I'm really focused on that 5100 to 5105 if we pull back there, and then it's about 5075. The NASDAQ also channeling back to that 50% level. The key area I'd be watching today on a continued rally is about 18,075 to 18,110 for key resistance. A close above 18,110 really takes it into, back to that potential double top territory. And my target would be, with the 62.5 rule, would be 18,509 would be the major target. The minor target would be 18,310. So, pullback areas. The minor pullback area right now is right around 17,725. And then you have a gap fill right to here to 17,600, roughly 17,650, and then you're back down to about 17,500 are your support levels. But this is pretty much the same analysis as with the S&P. The Dow needs, the key level is 39,272 on the rally basis. Other than that, key support still coming in at 38,560. Russell, full-blown celebration mode. Full-blown celebration mode, which, when you start getting weakening payrolls, I don't even know what the market's trying to price in. Are they still trying to price in a no landing? Has it gone to no landing versus soft landing? Because, you have weakening payrolls, still decently high inflation, and that does not bode well for small caps in the Russell 2000. But hey, I don't know what the market's doing other than watching the chart patterns. 2070 on the closing basis. That's the key area on the Russell. That's the key area on the Russell. Then it would be, the next target would be 2100, or return to 2100. Key support on the Russell, 2027 is your major support. The VIX crashing back down. Fear leaving the market very rapidly. Next is that 1375 level. If we break through there, then we're looking, 1375, then we're looking back to 13. 13. Again, fear evaporating from the market very, very quickly. The notes, again, bouncing. The note futures bouncing on the worst non-farm payrolls and the yield pulling back. The yield pulling back from the longer perspective, though, it's come back to the weekly rotation zone. I'm still watching even support at 4.35, then the next move higher, even if we pull back to 4.35. Is there any great setups today? No. Not from my perspective. Dollar index. Dollar index triggered. We had the double top. It triggered yesterday. Followed through today. First and second targets hit. We could still easily come back to this 104 area and the 103.80 to 104. But that's playing out nicely. So let's just jump to the euro real quick. Because we had that channeling double bottom pattern. Took a while to play out. But that's fully played out. Fully played out. And it kept back to that 200. So all that right there has played out with the euro. Took a little bit of extra time. Now against very key trend line resistance. But the bigger picture for the euro, if it can get through this area, would be a 50% retracement to about 108.70. So I'm going to keep watching for that going forward. Back to crude. This could be, we're getting to cycle bottoms. Remember, my bigger area is still a potentially bigger pullback between 77.70 and 75.20. However, and this would be a really tight play because percent beat buy would have to happen above yesterday's high. But then you have the rotations are right there. Remember, then this is my perspective. Just because if you can't get reward to risk, even if you get a buy setup, I don't have a trade because, again, I don't have risk to reward. I don't have the trade. So just because I have a setup doesn't mean I still have a trade. Always remember that. Just because you have a setup, that's only part of the equation. You have to structure the trade properly. And if you don't have proper reward to risk, for me, it's no trade because I don't want to catch a move and still lose money because I had to leave my stop a certain distance away and the profit targets were too close. But I will be paying attention to yesterday's high. Now, we could continue easily that pullback to 77.70 and still going into next week set up another potential buy pattern. By the way, keeping a little eye on this in natty gas, potential little mini double top with a gap left behind from the roll. So just if you're looking at natty gas, keep a little eye on that. Gold. Gold, we've triggered the double. Was on the little mini basis. There's a mini 4-hour double bottom, but it would need a close above 23.39.5 on a 4-hour basis. If this rolls back down, it's going to turn into a triple bottom. That will be off the table. And the overall bigger play still is the continued pullback, especially to this 22.58 area. That's what I'm looking at. The yen, with the dollar weakening, helping the Bank of Japan with their little intervention. So we'll have to see how long this lasts. But coming back to the major breakout area. So, looking at this as a longer-term chart, you had the prior resistance back from November, the pullback, basing right before that, basing for a couple weeks, the breakout level, and then the major reversal back to the very key support and the rotation zone. But there's no new long setup just yet. Bitcoin bouncing back after triggering the double. So we'll be watching for a potential roll. Now this can still run a little higher. We're at the prior breakdown zone, but this could easily return to 63 before rolling over again. Keeping an eye on that. Spiders Come on, let's get my chart. We're opening above the 50% retracement level of 509.24, so that's going to be key support. Remember, the key level for the rally to the probabilities to shift. Remember, not guarantees, but the probabilities to shift for a continuing rally are above 513.08 on a closing basis. So that's what my next target is to the upside. And key support coming in at 509.24 to roughly about 508.46. 508.46 is a pretty significant area right there. The Qs, the Qs, key area right now, we're opening 433.70 right around there. 433, that's roughly around this high area from Monday, the 29th. The key area for a closing base is about 435.75, and then the next target goes to 440, and then the 444.81. Let's see what else. You're not sure how to use, it's just a discussion group. What do you mean you're not sure how to use it? Paramount triggered the first daily double bottom at the close yesterday, and as biodocs continue, remember there is a larger weekly potential double bottom. Let's turn into Paramount. Let's just take a look at that. This is the double. This is the double. You have a double within a bigger double, and you still have the buyout talks. You're completely correct, Sterling. So, look at this. This is not technically a stop level, but I would not ignore this 1475 because it's a 62.5 for this whole correction, and it's actually a 25% harmonic from the double. So I would not look how well the harmonics line up with the double. Again, that does not, because it looks pretty on a chart, doesn't change the probabilities. It's just fascinating sometimes how things line up really beautifully from harmonics and doubles. So we have that little minor pattern, which did set up. Speaking of other patterns, you have Apple, which has still triggered the bigger, not on the weekly. It's only on. It did trigger on the weekly. The only thing that invalidates this massive double is a close beyond 186.89. The market's still celebrating. I mean, I think they're more celebrating the buyback and everything, but Apple's just not innovating anymore. Well, you know what? Tim Cook's not an innovator. He's a manufacturer. But we're going to keep an eye on that. NVIDIA, it's the buy everything Friday. NVIDIA's still in a flagging pattern after hitting the first target, the stop reduction target. So what would invalidate the double at this point would be a close above 892.27. Okay. Intel, you want Intel? Intel, I mean, any bounce play for me in Intel is still a rollover, at least till we get to this 28 area, because of the probabilities. Do you have a bigger bottoming pattern just yet? I mean, we got to zoom in here, or up. Not really. The only short-term thing I'd be watching is above 31 to a possible, then going into key resistance at 31.75. You know, this is definitely oversold at cycle bottom, so would not be surprised for a bounce. However, a bounce is not a long-term investment, and Intel's a longer-term play from my perspective. Hold on. Smokey, come on, buddy. All the windows are open. Looking out. Well, I'm looking at a wall now, but I'm looking at the wall. But here's what it looks like. Let's see. Hold on. How can I do this? There's what the look That's what it looks like out my office window. That's where Smokey's sitting out right now, barking outside. There's the view from the office window. So, again, not a big yard. Don't need a big yard. But it is a peaceful view, especially when the pool's running. Take a look at CVS. It tanked on a miss on earnings this week and is approaching major support level 51.72. What would you look for like a setup on this? Let's look at CVS. It's a peaceful view, you know? It is a peaceful view. I look at the wall, but if I turn a little to my left, like if I look right here at one of my chart monitors, right out, you got the nice little peaceful view. It's much more peaceful than it was. Well, I had a nice place in Chicago, but you know, I just like the pool. I do like the running water. Let's just see. I mean, you're coming into major support. What would I look for? Major support. I gotta do a little more analysis. Because I don't know if CVS is gonna pull out of this naturally, and because that does not line up real well. What would I look for? Well, any play at this any daily play, I'd have to get back above about 57 unless it forms a shorter term. You got this micro double, but I'd be real careful because I'd be watching only for a partial gap fill and then a rollover play. Partial gap fill and rollover play, and even if this got a bounce, set up something and bounced, let me see where the significant level is. It's right there. 64.95 would be any major key resistance. So would this turn into a long-term play? No, it would only be a scalpy bounce play. I think this support's still going to break. So no Chi-Town. No, I'm done. Not going back. I'm done. I'm glad to be back in the desert. Thanks, Legion Reaver. Thanks, Sterling. Yes, it's all AZ right now, Richard. Saying, hey, Eric, how you doing? Yeah, I would never have a pool in Chicago. You get 3 months, maybe 3 months of use, and you got to drain it every year. And I'm not going to pay for something for 3 months of use. It's a little different out here. What else do we have here? Let's look at the S. I know it's opened. But this is going to be very important going into the ISM numbers, even the S&P Composite and Services. The only thing right now is, hey, do we get a little mini double that triggers and the pullback move into that area, or is this double area going to hold and then it breaks out above 51.56, and then we target that 62.5 level. Let's see how the tick opened. The tick, very strong tick opening. Look at that. Very strong tick opening. Wow, that's the strongest tick opening. That's the strongest tick opening since back in January. That is the strongest tick opening since back in January. So, unless ISM really disappoints the market, I'd be watching for the pullback stability. So, even if that double were to trigger, that would just retrace nearly half the the non-farm payroll, the celebration of the weaker non-farm payroll numbers. Other than that, if this base is here for the next little bit and this holds, and then the tick bounces, I'd be watching for the breakout play. The early warning breakout play for me would be 51.53. I don't know if any other person in history has ever said, I'm glad to be back in the desert. I love the desert. Oh man, I feel so much better with the dry heat. I feel so much better. It's for me. I'm just not a humidity person. So, that sums it up. I hope everyone has a wonderful, wonderful weekend. And, take some time away from the computer. If you're a racing fan, it's the Formula One Miami Grand Prix this weekend. Big news on Red Bull and everything else with the shakeup there. But we shall see how that all plays out. Until then, enjoy your Friday. Just don't do anything crazy. Remember those ISM numbers at 9. So 25 minutes from now, do not get caught off guard. And I'm not saying they're going to be weak or strong or anything else. Just don't get caught off guard because that's pretty much for it today. With that, thanks for bringing up the charts, Sterling, the Paramount, and the CVS stuff. And I will talk to everyone next week. Bye for now.